got a few emails asking for help with videos and tutoring. You who haven't yet replied to that email I sent out asking you all whether you appreciate it if you took some time to send me an email and let me know if you're having trouble, need help, and if you need tutoring. I'm pretty sure we'll be able to find one, maybe two, or maybe more students who might be able to do some tutoring. I think Zoom is probably going to work out the best, things considered. So anyway, please respond to that email if you haven't. I'm gonna, what I did here in chapter 4 was I added an optional problem, problem 4-2A. This is kind of a long problem and it covers multiple learning objectives. It's probably a problem that would take, if I'm doing it like this video and really taking my time to try to explain concepts and steps along the way, it's probably at least an hour, more likely 2 hours, and possibly even as long as between 2 to 3 hours. So if it looks like it's going really long, I'll definitely try to segment it, maybe into a half hour or maybe 1 hour segments at the most. We'll see how it goes. So anyway, I'm in the Connect site, student site here, and let me make sure I have the right course here. Yeah, I do. Problem. See it on this site. Let me see if it's on the other site. Okay, here it is. Okay, problem 4-2A, optional, and let's get into it. And I also have my textbook, my print textbook in front of me here. And so we'll probably just proceed with what's on the screen. Remember that these problems, most of these problems, not all of them, but most of these are algorithmic. And what that means is that each time you work on the same problem, you have 3 tries for each of the assigned graded problems. If they're algorithmic, that means each time you work on any one problem, each time you start the problem again, the problem is the same, but the numbers change. The way it would work if you and a friend of yours in class are working, let's say, side by side on 2 different computers on the same problem, the same would apply. Let's say you're both working, 2 or even 3 of you working on the same problem. Let's say it's problem 4-2A, and it's an algorithmic problem. That means you're all working on the same problem, but each of you have different numbers in your problem, your version of the problem. So, it helps if you understand that. And of course, there are a couple of problems I assigned and I think they're in chapter 7, that are static and not algorithmic. And if they're static, that means that every time you work on the same problem, and again, you have 3 tries per problem. Every time, if it's static, every time you work on the same problem, it's going to be the same numbers. And similarly, if 2 or 3 of you are working on different computers side by side on the same problem, everyone will have the same numbers, again, for any problem that's a static problem. Okay, great. That said, let's get into problem 4-2A. Prepare a worksheet adjusting and closing entries and financial statements. And the learning objectives covered are C1, P1, and P2. Again, just a quick review. Let me get to the front of the chapter here. The conceptual learning objective C1, explain and prepare a classified balance sheet. For P1, prepare a worksheet and explain its usefulness. That's a procedural learning objective. And for P2, prepare closing entries and a post-closing trial balance. So again, each assignment should indicate which learning objectives that assignment is covering. Following unadjusted trial balance is for ACE Construction Company at its June 30 current fiscal year end. So this company is on a fiscal year. June 30 is the end of its fiscal year. So July 1 is the beginning of its fiscal year. So this company's fiscal year is July 1 through June 30. Credit balance of the VACE capital account was $57,700 on June 30 of the prior year. So what that's saying is that the of the owner's capital account on June 30th of the prior year, which would be the same as July 1 of the prior year, is $57,700. And the owner invested $20,000 cash during the current fiscal year. What I'm going to do here, see if I can get a little Excel spreadsheet out here. Maybe make a few side calculations that hopefully will be a little helpful. Let's see. Here we go. Let's see if that works. Okay, so, and this is just nothing formal, just some side calculations using electronic spreadsheet, which is an Excel spreadsheet. So, let's say we got ACE capital and the balance on it says June 30th of the prior year, which essentially means June 30th of the July 1st of the prior year. And let's just say the prior year is 2021. And that balance was $57,700. And when we analyze our owner's capital account, the components of the capital account, the different amounts that generally comprise an owner's capital account are the following. Of course, we have the beginning balance, and then we would generally add to let's say plus. That'd be easier to work with. Plus investment. Now, owner investment would be amounts that the owner is putting into his or her business. So, it says owner invested $20,000 cash into the business. Why don't we just put this over here? And then we would normally take a subtotal of the account at that point in time. And then we would add the net income or the net loss of the business. Finally, we would deduct drawings. Owner drawings are kind of the opposite of owner investment. Owner investment represents amounts that the owner has put into his or her business. On the other hand, drawings are amounts that the owner has taken out of his or her business, essentially for personal use. In a sole proprietorship, the owner can put money in and take money out of the business at any time, so long as there's cash available for him or her to do so. Owners generally are not employees of their own business that is a sole proprietorship. Okay. So we don't know what the drawings are, but we'll probably be able to get an idea of what drawings are when we take a look at the information given in the problem. And so we start with the beginning balance. We add owner investment. We add net income or deduct net loss. Let me put a line in here. Say or. So we know it's not both, but either or. They're running through these various amounts. We end up with the balance the end of the year, which in this case would be June 30th, 22. Okay. A subtotal is not required, but I'm just putting it in there to show that we have added owner investment to the beginning balance to get a subtotal of 77.7. Okay, so that's a little bit more work than that problem is asking for, but again, I just want to try and provide you with information that I think you might find helpful as you work through this problem and other problems moving forward. Okay, let's see. So we have the unadjusted trial balance, and the unadjusted trial balance, any trial balance is going to show accounts and account balances. And account balances are either going to be debit balances or credit balances, generally based on the type of account that's involved. Let me go pull out my handout, which I emailed everybody about. And that in Chapter 2. Now, I kind of apologize for having that buried out there in Chapter 2, bottom of the weekly instructions. Let's see if get this in a format that is that we can work with. That'll work. Okay, so again, our trial balance shows accounts of the business with balances in them, and generally account balances are going to be either debit balances or credit balances, depending generally on what type of account it is. So if you refer to this handout, the accounting equation, assets equal liabilities plus owner's equity plus revenues and minus expenses, what I've done here is I've shown this accounting equation with general account categories that are colored either blue or red. Blue colored account categories, assets and expenses, have normal balances that are debits. In other words, a normal balance is the plus side of any account. So for assets, we add to assets with a debit on the left side, and we add to expenses with a debit also on the left side. And also, let's not forget, under equity, under owner's equity, the drawing account is also a debit account, or an account with a normal balance that is a debit, meaning we add to the drawing account with a debit on the left side of the account. Conversely, the three account categories which carry normal balances that are credits, which means we add to those accounts with credits on the right side of the account. Those are liabilities, amounts that we owe, amounts earned through us providing either product or services. And under equity, the capital account, the owner's capital account, all three of these account categories are normal credit accounts, which we add to with credits on the right side of the account. By the way, debits are always shown on the left side of any account. Credits are always shown on the right side of any account. But whether it's a plus or minus depends on the type of account. Okay, now I'm not going to belabor that point, but if you were to keep this handout handy, whether it's printed, if you print it out, ideally you can print it out in color, but whether you print it out or keep it handy as a digital reference, I think you might find it helpful. So I'm just going to move it over to the side off the screen. And for the time being, we can keep this little Excel spreadsheet open over here. Okay, so we have a number of accounts. Generally, also, we have account numbers as well as account titles and account balances. And what's very important, a feature of the trial balance, is that the debit total and the credit total must always equal. Debit total, credit total of any trial balance must always be equal. If it's not equal, something's wrong. You have to backtrack, troubleshoot, and find your errors. Okay. Let's see. And accounts on the trial balance, any pre-closing trial balance That means we have not closed our temporary accounts yet. So any pre-closing trial balance should have some asset accounts, some liability accounts. If it's a sole proprietorship, we should have a capital account and a drawing or withdrawals account under equity. And then we should have a few revenue accounts, or at least one revenue account, and a number of expense accounts. All right. Let's see. So we need to do adjustments, and adjustments are the topic of Chapter 3. So this is a great review of that material. So we need to do our adjustments, and I think it's going to ask us to complete the worksheet. Now the worksheet is a time-consuming process, and so we need to take our time and approach this one step at a time. So let's see, let's kind of take a quick look. We have requirement 1, 2A, 2B, 3A, 3B, and 3C. So we have a lot of steps here that we're going to have to run through. Take it one at a time, and start with requirement 1 first. Now notice our trial balance, here, and by the way, if you're looking at the same problem in the printed text, or for that matter in your ebook, again, it's the same problem, but the numbers, because this is algorithmic in Connect, the numbers are going to be different from what you see in your textbook. So notice our trial balance totals are 280,900. So if we go down to our trial balance that is on our worksheet, notice that the credit side total is 280,900 and the debit side total is blank. And it should be 280,900. So we could, if we wanted to, check that the amounts in the debit column are exactly the same in this worksheet as they are on the unadjusted trial balance up above. That would be one way to check it out, but I have a feeling that we're going to somehow fill in that total at a later time. So we have adjustments, adjustment for supplies, adjustment for expired insurance, adjustment for depreciation, adjustment for looks like utility expense that has not been recorded. Looks like we have an adjustment for wages, employee wages that have not been recorded. We also have an adjustment for rent that has not been recorded. Also additional property taxes not yet recorded. And then some accrued interest paid or recorded. So we have a number of adjustments A through H. And let's take a quick look at what the requirements are. Requirement 1 is prepare a 10-column worksheet for the current fiscal year, starting with the unadjusted trial balance and including adjustments using the above additional information. So those would be these A through H. And so we'll have to take these one at a time. Requirement 2A, prepare the adjusting entries, all dated June 30th. So in addition to showing the adjustments in the adjustments column on the worksheet, We also will have to, in requirement 2A, we'll have to journalize in the general journal each of these adjustments. Requirement 2B, prepare the closing entries, all dated June 30th. And similarly, as for adjustments, also for closing entries, we'll have to journalize each of the closing entries in our general journal. Requirement 3A, prepare the income statement for the year ended June 30th. So if we take a look at requirement 3A tab, we have an income statement, kind of an empty template there. And I'm sure you guys already know that each one of these amounts are pull downs. So generally we have a pull down that gives us a choice of textual answers as well as numerical answers, which is pretty cool. And then requirement 3B, prepare the statement of owner's equity, and 3C, prepare the classified balance sheet. And so for each of those, we'll have kind of a template to use in coming up with the information for that requirement. So it's a lot of work. It's a lot of work. This is at least an hour long, probably more like 2 hours long. And because we're doing it this way with a video, and I'm taking my time and trying to explain things slowly as I go, it might take hours. Okay, so let's take it one step at a time. Requirement 1, prepare the 10-column worksheet for the current fiscal year, starting with the unadjusted trial balance and including adjustments using the above additional information. So adjustment is supplies available at the end of the current fiscal year are 3,420. So our supplies balance, the end of the fiscal year, which would be post-adjustment, after adjustment, should be 3,420. Now notice our supplies balance prior to making this adjustment for supplies used is $9,500. So let's see if we can do a quick calculation here using our spreadsheet, supplies used. So beginning balance, adjustment, 9,500. Ending balance, post adjustment is 3,420. And so I'm going to say here, supplies used, and I'm going to subtract these two amounts. So I'm going to add beginning balance and subtract the ending balance, and that gives us the amount of supplies used. We can take this colon out of here. It should be 6,080, and so that would show up as a credit, 6,080. And for every transaction, which includes adjustments, we need both a debit and a credit So if we are recording supplies used, then our credit entry to our asset account supplies, and our debits generally precede credit, so I'll make sure I put them in the right order here. Our debit entry supplies expense. There we go. It refers to the amount of supplies used. So we debit expense for supplies used, and we credit the asset account supplies. So the asset account is going down or being decreased with a credit, and our offsetting debit will be to the supplies expense account, $6,080. Since our supplies expense account beginning balance or pre-adjustment balance is zero, let's say zero, and we're adding $6,080, so our ending balance in the supplies expense account is $6,080. All right, that's adjustment A. Guess what? I put those up here in the wrong column. It should be 6080, and this 3420 should be in this column, and so I used the wrong columns there. That's better. Adjusted trial balance, debit balance in supplies 3420, and I did the same thing here. The adjustment is debit of 6080, and the adjusted trial balance in supplies expense after the adjustment is 6080, not this account. Sorry, not in this column. Okay. So what we've done here is we've shown one adjustment A, for supplies used. Again, let's dig up that calculation. Beginning balance before adjustment 9,500, ending balance after adjustment 3,420, and so if we subtract the two, we can get the amount of supplies used during the year, $6,080. We record that as an adjustment by debiting supplies expense or adding to supplies expense. Let's bring this over here. We add to supplies expense with a debit, and we subtract from supplies, which is an asset, with a credit. So we credit supplies. Okay. Let's see, adjustment B, cost of expired insurance for the current fiscal year is $3,780. Cost of expired insurance for the current fiscal year, $3,780. Now, to record an adjustment for expired insurance is a little bit more straightforward. And the related accounts are prepaid insurance on the which is an asset account, and insurance expense, which is an expense account. And so again, the amount of prepaid insurance that has expired for the current year is $37.80. And so to record an expense, we debit that amount in the adjustments column, 37. Our offsetting credit is our asset account prepaid insurance, which had a beginning balance of $6,000, and we're going to credit it $37.80. And it's going to result in a balance after adjustment. And again, we can show that on our calculation. Prepaid insurance expired. So we show our beginning balance pre-investment was $6,000. Our this one is a little different because they're not giving us the ending balance. We need to calculate it. What they are giving us is the amount of insurance expired. So this is going to be that $37.80. So to get our need balance, which is post, we're going to take our beginning, subtract our insurance expired to get our ending balance, which is $22.20, and that's going to show up as a debit. Our adjusted trial balance column, and our insurance expense has a beginning balance of 0, and we're adding the expired insurance of $37.80 to come up with an ending balance for insurance expense of $37.80. Notice each adjustment requires a debit and a credit, debit and a credit. So as we move to the right on the sheet, every two columns are together. One side is the debit side, the left side is the debit side, the right side is the credit side, and the total in each of those pairs of debit and credit accounts should be equal. Okay. We started out with a in the unadjusted trial balance column with a blank total, so I'm not sure what exactly is happening there, but we'll see as we move forward. And at this point in time, I am going to stop this recording. I think this is a good time frame. I'll stop this recording and come back to it later.